Saketh will be speaking about trading psychology. He started his journey with equities and then he shifted to option selling. He has created FinTarget, a free-to-use automation platform that he has made available to a larger audience. Saketh, can you please have you on stage?
Yeah, hi guys, am I audible? Okay, first of all, a very good evening to all of you. Right, so before starting off with the session, I know it's a last session and after this we are also going to have some dinner. So I'm pretty sure all of you would be excited, but I also want you to show the same excitement here, right? Before we start off with trading psychology, I would like to tell you a few things. The very first thing is I have tried to keep this slide very simple and plain. Why? Because today I'm going to tell you a lot of stories. And I don't want you to see the presentation and not listen to me, right? So the presentation is going to be very plain and simple, where I'm going to tell you a lot of stories about myself, how things have been evolved over time, right? So this year, how many of you have actually made a loss? So this financial year can stand up. Stand up. Right? Okay. So we have, I would say, somewhere around 20% who would have made a loss. So now coming to the second one. So how many of you have actually made a profit of over 50% this financial year? Okay, so we have a few more people standing here. And how many of you are, or do you feel that you are going no place or nowhere? Like you feel that you are stuck right there, making some money one day, making another, some more, losing some money one day. So stand up, all of you stand, right? So the thing is, today's entire session is mostly going to be about our mind, about psychology, right? So why exactly do I think I can actually give a good session on this is because this particular year has been the worst year for me for options trading. This entire financial year, I have only made a total of 14%. So 14% is still good enough for me to say, okay, like I'm doing better than most of the traders because most of the traders make a loss, right? So okay, coming back to the whole thing, I identify myself is as an option trader. And this entire year, I have only made a total of 14%, right? So I have still done better than most of the traders, considering that since lot of people lose money. And if you take a look at the overall or how much I have done this entire year, right? So that is quite huge. To be honest, if you take a look at my account for the entire year, I am up by almost around 200%, almost close to around 185%. If you take in terms of percentage or if you take in terms of absolute, this is the highest return I have ever achieved in my trading career, right? Almost around 190%, right? And this is because of equities and futures, right? So in spite of making or getting my best return in terms of equities, getting my best return in terms of futures, I am still not happy as a trader. Why? Because I identify myself as an option trader, and what I identify myself as, I have not done well in that particular aspect. So this particular thing made me realize one thing, right? So money is not a motivating factor for me to be a trader, because if money was the motivating factor, or if I had just gone behind money, then this should be my happiest year, right? So I should be very happy because I have got the best performance in terms of percentage, best performance in terms of absolute. So I was able to multiply a small 50 lakh account almost around 6 times this year itself, right? So, but in spite of all this being put to place, I still feel somewhere that this year's performance has been below average. And the reason for that is I consider myself to be an option trader more than, let's say, a future trader or an equity trader, right? So that's the reason today's session is going to be more about the entire trading psychology, how I am actually perceiving things over time, how I feel about things happening over time, right? So if you take a look at my journey, so if it started somewhere around 2013, it's been a decade. And every single year, if I am called on the stage, I will tell you a different story about psychology, because every single year I will have a different experience with market that will teach me so many things, and I will be telling you a different story, right? So next, going forward, the very first when I started trading, maybe somewhere 2013 I started, 2016 to 17. This was the first time I realized that strategies don't matter. So it doesn't it doesn't make sense to tell that this is the best strategy. Do this, you will always make money, right? Strategies don't matter. So this is the first thing which I realized after trading for 4 years. So how many of you here do straddles? How many of you here do strangles? How many of you here do option buying, right? So you can see that a lot of people are doing a lot of things. So many people are still profitable, right? So what exactly is it? It is not about the strategy. Two same people executing the same trade, sitting next to each other, will get different results. So if it was strategy which is giving them money, both of them should have got the same result. But when they sit next to each other and trade, they are getting totally different results. The reason for this is because it is more with the mindset and the execution. So it has nothing to do with what exactly we think it is, that strategy, because you see a lot of beginners keep going behind, okay, I want that strategy, I want this strategy, right? But eventually you will realize it is not about the strategy, it is about the execution. So this realization came to me somewhere during 2017, when I realized that I have to start focusing on executing things properly and building consistency. So then maybe towards 2019 and 20, right? So this was 2017. So during 2019 and 20, so I learnt one more lesson. Along with execution, it is also important to focus. A successful trader should also have discipline and risk management, right? So this lesson goes back to 2019, where things were going very smooth, and back then I was literally making 2-3% every single week because we had leverage, and leverage was a fantastic tool. So if you were using it well, it was a fantastic tool, right? So the most important thing is discipline and risk management, and this was a very hard lesson I learned. So one was during the Nirmala Sitharaman candle. So how many of you here have traded during Nirmala Sitharaman candle, right? So most of you would have made money, some of you would have lost money. So I did make money on the first day, but on the second day I actually ended up losing. So let me tell you why, right? So it was mostly because of these news channels why I actually lost money, but I can't really blame them because it's my loss, right? So on Friday I made fantastic profit, right? And the tax rates were reduced from 30% to 25%. Over the weekend, all the news channels started to come out and tell, oh, this is such a great move, the markets are going to rocket, all these stocks are going to get re-rating, that, this. So coming to trading on Monday, I believed, okay, like this rally is just begun, it is going to go further up. And I shorted like how they had expected. It did open gap up. It is not that market opened flat, right? So it did open gap up, and it further added to my conviction that market is going to go up, because I was expecting it to go up. It opened with a gap up, and what I did is I created deep in the money short straddle, thinking that okay, it is going to go up. But unfortunately, the time when it opened, it also made the top and started coming down, right? So within 30 minutes, 10% of the capital wiped out. And I continued to hold, and again within an hour, almost around 15% of the capital wiped out. But back then, 10%, 15% of the capital didn't mean a lot, because it took a month to recover, considering there was leverage, right? So the second thing what I learned was again during 2020 crash. So that is during the COVID crash, where the markets actually fell so much, and then like I was thinking, okay, markets cannot hit lower circuit. Lower circuit only happened in 2008, and when have I ever seen market hit lower circuit after 2008? No time, right? So how do they even go 10% down? It's almost impossible. So with this thought process, I actually ended up shorting put options and again burnt my fingers there. But this time it took me quite a lot of time to recover. So one day loss took me almost 3.5, 4 months to recover. So back then even the premiums were quite high. In spite of high premiums, I took a lot of time to recover my loss. So these two taught me a very good lesson, that always have a very strong risk management, right? So if you have a strong risk management, if you don't give up more than say 3 to 4 days of profit in a single day, you can any day come back and recover the loss, right? So one good day is enough to recover the loss. But the moment you let go of 2 months, 3 months profit in a single day, it is going to completely mess up your psychology, right? You are not going to have the kind of confidence you need to come back and trade the next day. So you will that night go to sleep thinking, what did I do, right? So why couldn't I just cut the trade back then, right? So the moment you let your loss exceed your comfortable limit, you are not going to cut it at any point. So trust me, if you had thought that you want to cut at 10,000, but you let it run till 20,000, right? So you are not going to cut at 20,000, you are going to make it bleed till 30,000 or 40,000. So this is a general practice which is going to happen, and this is the second lesson which I learned. So now in 2023, so I will tell you a story. Tell me how many people will be able to relate to this, right? So I will tell you my daily story. I come to the market every day expiry is there. So I come to the market every day. Morning, so I stopped trading during the first hour, so I only start to enter position post 10 o'clock. So I enter the position. So till 1:30 I will be in front of the screen. So I would slowly make some profit. One spike comes, full profit gone, right? So then I will also maybe go to a small loss also, right? So then again from 1:30 to 3:30 or 1:30 to 2:30 I will sit and recover that loss. And finally the money is only made between 2:30 to 3:30, right? So all the money which, or most of the money, 60% of the money is made only between 2:30 to 3:30, but I sit in front of the screen whole day. So how many of you are able to relate to this story? So you can see that most of you are able to relate to this, because it just feels, this time it just feels that I am not in sync with the market, right? So along with, so this is the third lesson what I have learned over my years. So first one is that strategies don't matter. The second aspect was be focused and disciplined and also execute well. So one is having a good risk management system. Two is having the discipline to execute it. So risk, when you ask people, they say that okay, I don't risk more than 2%. But do you have the discipline to execute it? When you actually hit 2%, will you cut your trades? That is what is going to matter end of the day, right? So second one is discipline, and third one is being in sync with the market, right? So this year has not been bad, but somehow I feel that I am not able to sync with the market. So why exactly do I feel that? So this is something which I am realizing recently. So because I have not had a great year this particular financial year, right? So what do I mean sync with the market? One example, as I told you, like with respect to trade. So I am going to give you further more examples, like what exactly I mean by that, right? So here coming to sync with the market, right? So what exactly tends to happen is I am not actually underconfident, or let's say for example, I have the confidence to execute the trade. I am following my risk management very strictly. I am disciplined to follow, like I have the discipline to follow my risk management, right? So in spite of that, I am neither making a huge gain nor losing a lot. So that's the reason I have the confidence to actually come and execute, right? So, but in spite of having the confidence, in spite of having the discipline, in spite of having the good risk management, I am not making money. That clearly shows that somehow markets and I are not in the same line, right? So I have maybe made a small graph of the same. So one is when your risk management is very bad, you don't have good discipline, and your sync with the market is very low. So you are obviously going to have a very low, so you are going to make a loss. Your profitability will be very low, right? So second one is you have low risk management, right? So risk management is quite low, so you're not cutting things on time. So, okay, I had to rearrange these two graphs, so I have missed there, right? So assuming that you have low risk management and you have very high sync with the market, right? So in that case, you are actually going to make some profit, but you're also going to lose it somewhere if you don't manage it well. The third one is where you have very good risk management, but you have very low sync with the market. You are going to end up like me in the third position where you are not going to make a lot of money. And finally, the third one is where you are syncing with the market well, you have very good discipline, very good risk management, you are going to make a lot of money. So now if I may ask you, how many of you actually fall under the first category where you don't have discipline, you don't have risk management, and you are not able to identify or understand what is happening with the market? So it's good to know. Okay, one person is actually raising hands. So now coming to the second one where you have average risk management, but you are able to judge the market direction very well. Okay, that is pretty good. Now coming to the third point where you have very good risk management, but you have very low sync with the market. You are not able to judge the market very well. So we have quite a few for this, and I won't be asking for the last one because I will be quite jealous of them, right? So who is having good risk management and who are able to have sync, right? So one more example I will give you just to give you an idea of what exactly do I mean by this. So yesterday I was bullish on the market. Nifty fell in the first hour, and I somewhere felt, because the entire global markets were positive, as you all know, even DAX opened positive. Yesterday I was bullish on the market. Have you ever heard of a person being bullish on the market, taking bullish position and still losing money? And that was me, unfortunately, right? So what really happened is while the market fell in the initial stage and it started consolidating, so I felt, okay, markets might bounce towards 22,000 towards the later half. But I was further bullish. I didn't want to create a straddle. I started creating triangle, right? So I had shorted a 22,200 call. So I was not even close to the market. I was quite far away, 22,200 calls, right? On the put side, I was quite near actually, 21,800. Then I slowly started shifting up. So I never expected that there might be a time when I will actually lose from the call in spite of being so close with the put, right? I started shifting put, This call at one point had come to just 2 rupees. I thought, okay, it has come to not even 2 rupees, actually lesser than 2 rupees, 1.3, 1.2, right? It was trading around this. I thought, okay, how can I lose money from this? It's a free money, right? So just put it in the pocket, sell quantity and go home, right? So then slowly market started to recover. Then I was like, okay, no problem. 22,200, you see, oh, 20,000 only this much call, 22,100 this much call. So there is no way 22,200 is going to even get tested. I started shifting the puts up. From 21,800, I came to 900. Markets went further high. Okay, again shift the puts up, 22,200 is still farther away. And finally, this particular call option at one point ended up going to 16, 17 rupees, right? By the time I exited, it went to 16, 17. I think towards the end, it went even higher, right? So now the thing is, in spite of having a bullish view, in spite of being bullish throughout the day, I still lost money, and I still don't know how exactly I lost money, right? So that is something which I don't even have an answer to, right? So this is something which I call is staying totally out of sync with the market, right? So market is doing what you want, but still you are not able to extract the best out of it. And when needless to say, when market doesn't go where you want, right? Then to give you one more example, right? So during 2022 to 23, at least that financial year, most of my money came from positional. So what do I mean by positional? Whenever I create a positional trade, let's say overnight, market open flat, slightly up, slightly down. So what used to happen is that used to give me a booster of 0.15, 0.2% in the opening itself. And all I had to do is build on it. I didn't have to struggle because I just had to build on it. Nowadays, positional has become so hard that if market opens in your favor, you don't get money. But if market opens slightly against you, you will definitely lose money, right? So then at one point I decided, okay, I will stop positional and I will stick to intraday because positional is not giving any money, at least for me, in the last 4 to 5 months. So have you guys been in this position? Do you feel that, okay, at this point, you are maybe facing something similar to this? You can raise your hands, right? So, how many of you associate this to be, or how many of you who are going through this think yourself to be a bad trader? So, you can raise your hands. So, how many of you have felt underconfident thinking that, okay, something is wrong with me, I am doing something wrong, right? So, maybe most of us might have felt somewhere inside when we actually look at, as many people already mentioned in this session, when we look at other traders, right? So, when we look at other traders making money, making 1% every day, you feel, what are you even doing? You are not able to even make 0.2, 0.3% a day, and the other person is easily extracting 1% a day as though it's a piece of cake. So, you must be a bad trader. You must be you must be not doing things properly, right? But that is normal. So, I would like to tell you, so in case if you are able to stick to your discipline, if you are able to stick to your risk management, right? So, coming back to sync with the markets is normal. So, let me just give you a simple example. So, even top of the topmost player who are at their fittest form, so when I say fittest form, I am referring to sports, not trading, right? So, who are in their fittest form, literally the best, will sometimes go out of sync with the entire game. And the best example is for us, Virat Kohli, right? So, nobody knows what happened to him from 2020 to 2022, right? Suddenly, as though so you can see that from 2008, he had 0 centuries. But if you start looking at 2009, 10, 11, 12, so his records were fabulous. He was best, top of his game, right? Nothing could really stop him. But later, for almost around 900 days, 0 centuries, right? So, any ball he's trying to hit is either becoming an edge and going for a catch, right? So, was he not fit? So, he had his peak fitness during this period, right? So, literally the peak fitness during this period. Doesn't he have skill to play cricket? He is the most skillful batsman, right? But what was happening to him? How is it possible that a person who hasn't even scored less than 5 centuries from 2016 suddenly for 3 years cannot even score 1, right? So, this doesn't define you as a trader. So, in case if you are not able to judge the market, if you are not able to catch the trend, in case if you are not able to make the profit at this particular point, it is not going to be a definition of you as a trader. It is just that at this point, it is not working out for you and you have to stay in the game, right? So, I will tell you one more thing with respect to when it comes to cricket, right? So, you don't get chance. Let's say if this was not Kohli, if somebody else had this record, he would be thrown out of Indian cricket team, right? So, nobody else would get the chance to stay for 3 years without having a good record. But in market is very fair to all of us. Market will let you be as long as you are disciplined and in the game. It will never say, I am going to throw you out. So, if you manage your risk properly, it is going to keep you in the game for how many ever days you want, how much ever long you want, how many ever years you want for you to come back someday, right? So, in case if you are having any issue, there is no need to worry, just focus and stay in the game. So, it's just like a cycle. How, for example, 5 years ago, how many of you invested in PSU? I don't think any hands would go up. So, anybody investing in PSU 5 years ago, right? But how many of you have started to show interest in last say 2-3 months? A lot of people here, right? So, this is something which I would mostly like to say with sync. Again, Kohli came back to sync in 2023 and you can see his performance. He scored 6 centuries in 2023 and his performance continues to be top notch. So, I will try to conclude the whole speech in the next 10 minutes. What I would like to tell you is what are the do's. So, when you are in this situation, when things are not working out for you, so how do you come? I can't say how do you come out of it because I am still not out of it. So, once I do that, maybe next year you attend the session. If I am out of it, I will tell you how you can do it. But at least I will tell you what I am doing right now to make myself stay in the game, right? So, the first one is accept it. So, a lot of people very easily put the blame on the market. So, how many of you have actually done this? I had the perfect trade. Today market did something, it took all my profits away, right? So, Easy, very easy. Like put the responsibility on somebody else. Just throw it on somebody else. I am perfect, but market is wrong, so I lost money, right? So this is something which is very usual for us to do, where we don't accept that, okay, something is wrong with our style, something is not working out for us, right? Rather, what we do is we simply try to put the blame on the market. So what we have to also understand is, end of the day, since everything is a zero-sum game theoretically, right? So nothing is wrong with the market. Your money is going into somebody else's pocket. Sir, if you have made money, you might have mostly taken money from the person sitting next to you, right? So even though today you are looking at each other and smiling, morning he might have taken your money and gone, right? This would be the reality. So somebody sitting next to you would have taken all the money and gone home today, right? So it is not that market is wrong, because people are making money, people are losing money. So it is something which we have to figure out ourselves and take the complete responsibility of the same, right? The second thing which I want to tell mostly in this scenario is try to stay light, right? Try to stay light. So no need to push yourself to take big positions, achieve higher returns. So right now, if you ask me, maybe 1 year ago, I would tell I am aiming to make at least 2 to 3% a month. So now my whole idea has come down to, till I get comfortable, I just want to make 1% a month, right? So I want to stay in the game, I want to make 1% a month. So what I have started to do is, rather than trading aggressively, rather than taking a lot of positions, keeping tight stop losses, like immediately adjusting, what I do is take very small position, keep 2x, 3x stop loss, right? So if it hits, no problem, my loss will be small, again I will sell some penny options and I can cover it. So this way I have started to reduce my position size as much as possible till sometime I feel that, okay, now trades are suddenly going in my favor. There was a time, you won't believe, that any trade I took, literally any trade I took went in my favor. And that time I felt like a king. Oh, the market is nothing in front of me. Like I can literally take out how much ever money I want from the market. And so easily times change, so easily times turn. But now I don't feel that I can make any money from the market, right? So don't increase the position size. Rather try to get comfortable by having small trades. Just try to be there. The reason why you can start with small trade is, as Kiru sir mentioned in the first thing. So if somebody pinches you, you will forget it. So if somebody cuts you with a blade, you will remember it, right? So don't even let the market pinch. So let the pinch be a touch, right? So you try to make sure that the pinch becomes a touch till you feel that you are strong enough to again fight back in the market. And finally, the third one, what I want to tell you is stay in the game. So I will tell you why exactly staying in the game, or the funda of staying in the game. Most importantly, in case if this is not working out, so it's better you improve. It is also better that you explore, right? So I had a very rigid mindset. If you asked me, okay, how many of you are HDFC Bank fans here? Raise your hands. Any dip you keep buying thinking that, oh, now it is even more valuable, even more undervalued. Every single dip you convince yourself this is the most undervalued bank, and who keeps buying HDFC Bank, right? So I was there at one point. So every single dip I used to add Kotak, HDFC, Kotak, HDFC, and unfortunately this is the same thing which I did from 2018 to 2022 end. And they gave me zero returns. I had accumulated this much shares and kept, and they gave me zero returns, right? So, but luckily for me at that time options was doing well, so that's why my portfolio or the overall this thing was going up, right? So now I thought, okay, while this option was not working, all the stocks are going up, right? Literally you take XYZ stock except HDFC, it would have gone up, right? So it was also the same thing for ITC at one point in time, and even now ITC investors who celebrated, again it's coming back to around 400, somewhere around 390. So there is nothing wrong with the company, there is nothing wrong with the stock, right? So like for example, me holding this stock for almost around 3-4 years, I had made zero returns, right? So all this was made up just in 6 months because I thought, okay, this is not working, right? So now my options is not working. So I am trying to stay in the game with options. Now let me just try shifting from HDFC to stocks which are having little more momentum, which are actually moving. Why not be a part of them and make some money? If one side is not working, I'll try to make from the other side. So this is how I got into stocks like BSC, this is how I got into stocks like IDFC, where I was able to make huge returns in a very short span of time. BSC literally quadrupled my investment. So I had put a significant amount of money and I got quadrupled my investment. And then one more stock was AWHCL. I had bought it around 300 and today it is around 500. Then another stock is EIH Hotels. I had also put a tweet on that. So I had once gone to Oberoi, I really liked the hospitality and I ended up buying stocks. But today that has given double the money, right? So whatever I had put in, it has doubled the money. So if I had not been open to the idea of maybe exploring momentum and just stuck to making sure that I only trade, only buy HDFC, I maybe wouldn't have made money at all. Even this year I wouldn't have made any money. So since I was also not making money with options, I tried out futures, right? So trying out futures was a boon to next level. So I never really expected, maybe 2 years back, if you had asked me how much returns are you expecting, even 1 year back, maybe what I have achieved in the last year, that would have never been my expectation at all. So why I was able to do it? Because I tried to explore something different. So I started small. It's not that you might have seen me go big quantities of futures on Twitter, but it all started small. Once I got in sync with the game, right? So I can lose again sync with the futures anytime, but today things are in momentum and I feel that I am able to catch the momentum easily, right? So I am catching it. I am more in sync with trading futures than trading options for current year at least, right? So if that is the case, why not make the best use of it, right? So why not stick to only options? Why do the same mistake what I did with HDFC? By not changing and just sticking to the same thing and making sure that I only do this, I don't want to change, right? So won't I come back to HDFC? I will come back to HDFC, but maybe once it gets back little more momentum, once people start, so PSU was a beaten down sector, today everybody is interested. So if you had bought PSU and in 2008, right, you would have made the same money for a person who bought it in 2023 December. Like both of you would be on the same return, no difference. So then what is the point of, like, literally you can make your stock or make the process a girlfriend, but don't make it your wife, right? So learn to leave it if it's not working, right? So this is mostly what I want to tell you, because end of the day, it doesn't matter. You have multiple avenues in the market to make money. You can make money with equities, you can make money with options, you can make money with futures. There are multiple ways to make money. So just try to be above average. To be above average, you just have to make something like 20%, 25% a year, right? So that is the CAGR you want to achieve, 20 to 25% a year. You can achieve it through multiple avenues. Don't only think I only want it from options, I only want it from selling. So even today I'm not really open to buying options because I don't feel very comfortable, right? So maybe I can try exploring with smaller amount. There is nothing wrong with that. It's better to be little more flexible with it, right? So this is the last slide, and that is, you can see that trying to achieve, like say 20, let's go just with 20% returns, right, for 20 years, right? So you would be making close to around 30 times your money. But same thing, if you just increase it to 30%, you would be making almost close to around, how much is that? So almost around 180 times your money. Let's say you start with 1 crore, you will be having 180 crores, right? So to do 30% consistently, you need to be motivated to come to the market every single day, right? So every single day coming to the market and making sure that you deliver returns is something really hard. For that you have to enjoy the process. So to enjoy the process, don't try to take too much stress on yourself. Don't try to take so much stress, I have to achieve it at any cost, I have to do this at any cost, right? So you are going to achieve it. If not this year, you are going to get a brilliant year where you make 100% and make up for 2-3 years returns. So the most important thing is to stay in the game. To stay in the game, you have to take things more lightly. So don't put too much pressure on yourself, take things lightly, try different things if something is not working out. See in which part you can actually get your sync right. So which is actually working out for you. Try to double down on it and see if you can get your profit. So currently this is my maybe this year's psychology lesson, what I have learned. Maybe my last year's psychology lesson, if somebody would have attended Traders Carnival, would be totally different, right? So it was mostly about being disciplined, mostly about risk management. But today the lessons have changed because markets have changed. So with that, I also come to the end of today's this thing. I hope all of you enjoyed the session, and thank you very much.